we're going to be looking at is initial jobless claims, and they moved from 229,000 down 8 to 221,000. And by the way, that 229 originally released last week at 227,000. Continuing claims moved down a smidge from 1.694 million to 1.686. And trade balance for the month of May expected to be 54 billion, of course, with a minus sign all in red, is a little bit larger deficit, minus 55.5 billion, sequentially following a slightly upwardly revised previous month of 51.2. So indeed, it moved up about 4 billion. And we know that ADP was released. It was definitely a little light, but we did garner some from last month. Interest rates, how low can they go? We're doing the interest rate limbo. And of course, Ms. Lagarde is going to be head of the ECB, and most likely we will see interest rates continue to move down, of course, expecting her policies when she starts after October 31st to mirror, if not enhance, Mario Draghi's stimulus. Andrew, back to you.
Rick, I actually have a question for you. It's Melissa. On Friday, in terms of the jobs report, hey, what do you think would be the Goldilocks numbers for the markets? And I ask that because I'm wondering if bad news is actually good news, because that seals a Fed rate hike and more hikes to come. Cut, excuse me, exactly.
I think Goldilocks, in my opinion, will be anything 175 or higher. That would be my opinion.
So stronger number.
And I really don't understand if it's going to be good news, bad news. I just understand at the end of the day that our rates, even though many want them to be lower, are really a beacon for much of the world that continues to sink in the quagmire of negativity.
Okay. Rick, great to see you. Happy July 4th, my friend. We'll hopefully see you on Friday when we get the jobs numbers as well. As we just saw with the continued low levels of jobless claims, the economy humming along nicely as the third quarter kicks off. But the question, of course, is will investor confidence hold through the second half of the year? Joining us right now on that, Jared Bernstein is joining the conversation, former chief economist and economic policy advisor to Vice President Joe Biden. He's now with the Center on Budget and Policy Priorities and also a CNBC contributor. We also have our two special guest hosts this hour, hedge fund veteran and former White House Communications Director Anthony Scaramucci and Kevin O'Leary, chairman of O-Shares ETFs and co-host of course, I was going to call it Squawk Tank, but we'll call it Shark Tank this morning. Jared, I'll go to you, but I want to get everybody involved in this conversation. Do we think that, based on what we're hearing, both in the ADP numbers this morning, some of the numbers we've gotten in terms of earnings, that the second half is actually going to be better? I mean, everybody thinks the second half is going to somehow be terrible, but I'm not so sure.
I don't think it's going to be recessionary, but I don't think it's going to be as strong as we'd like it to be. I think we're going to see some important numbers fail to hit expectations, just like we did with ADP. I'm more concerned about Friday's jobs number. I thought that was a good question about a Goldilocks number. I'd agree. Anything below expectations is going to be unsettling, because we're really all in this place where we want to discount one or two negative numbers, especially with the unemployment rate so low. One or two numbers that miss expectations aren't a big deal, but now we're starting to see more. This little bump in the trade deficit, that's also concerning. It's a small matter, but we have a strengthening dollar. We're growing faster than our competitors. That's going to pull in more imports. We have lots of global tensions around the trade war. So I think there are enough reasons to be concerned. I think the consumer remains strong, and in a 70% consumption economy, that's the big story.